So hello everybody, welcome to our CoolCare webinar with Alex Ramamurthy from WageStream. Today's webinar is on boosting retention, attracting talent, and how to bring financial well-being to your care workforce. It's probably the longest webinar title we've ever had, but it's exactly what it says on the tin. So we've just got some people coming in, as you expect. Participants are kind of joining us. We've got approximately 40 registered, so we've just started. So we usually leave it for a couple of minutes, give everybody a time to get in and start, drinking their cup of tea and looking at this nice picture of Alex before we start. Okay, as the participants starting to fill up. As I said just a moment ago, we've got Alex Ramamurthy from WageStream to talk to us about how using WageStream can boost retention and attract talent. So we'll start in a moment or so. There is a webinar chat available for you to just type your questions in. So feel free to go ahead and type any questions you might have into the chat. Should be like next to your little control box. What we can do is we can answer questions as we go along. So you can kind of get your answer from Alex as we are moving through the presentations and what he has to show us. We are recording this webinar, which you probably noticed when you signed in. We will be forwarding that webinar at the end of the session, probably tomorrow, because we usually cut out a little bit of us, Alex and I, chatting at the beginning. So we send that on to you with a recording. It'll be a link to YouTube. And also, we do have a 2-pager on WageStream's successes in care and some of the logos and brand names that you might recognize. So we will be sending that on to all registrants. So as I said, if you do have any questions, we do have a live chat, so you can just type away and say, if there's anything you want a bit of clarification on. And we will be having time for questions at the end for Alex to answer. Or if you've got any questions for CoolCare, I will be here as well, so we can answer those kind of questions. So it is officially 2 minutes past, so we'll just kind of crack on. Now, looking at the registrants, we have quite a few CoolCare customers, but we also have some that are not CoolCare customers. So I'll very quickly kind of talk a little bit about CoolCare and then pass over to Alex. So CoolCare is all about making operating your care home easier, more efficient, and more profitable. Within the system, we do have occupancy and inquiry management. We do have time and attendance and workforce management. WageStream links to the time and attendance aspect, so where staff members are clocking in and out using our biometric or our fob devices. That is creating live timesheets within the system. That is linked to WageStream so that they can kind of see what's going on, and that's how the whole process works. Kind of key point I'd want to point out here is that we are able to effectively guarantee using the biometric that the person who's clocking in and out is definitely who they say they are at the time that they say they are, in the location that they say they are. So if they're working in a different home and that attracts a different pay rate, all of that is live. And therefore you absolutely know, unlike perhaps any other form of timesheet collection, that you are sure that when WageStream says that they have earned so much so far this month, you are absolutely sure that that figure is correct. We do have lots of different integrations. Skipping to number 4, we do have what we refer to as earned wage access. We've had FlexEarn for a couple of years now. WageStream is similar in some ways, but different in many other ways. And Alex is kind of going, similar? What are you on about? So he will explain exactly what we do. And I think the major difference between the two is that WageStream is so much more capable for larger organizations and offers an awful lot more. Whereas FlexEarn is much more simpler and is often, could be argued, and I think Alex would agree with me, for smaller organizations, it works perfectly for them. So it's horses for courses. We're not getting rid of one and sort of going with another. They'll both be available. We love to give customers choice, and that's why Alex is here. And it's over to Alex for his slides now.
Thanks a lot, Ian. Right, let me just share my screen. Okay. Well, I can't see you all, but thank you for joining. Really appreciate it. The partnership between CoolCare and Waystream is designed to empower care providers like you with powerful tools to improve stuff like recruitment, to enhance your retention, and really significantly boost your staff well-being. So today you're going to learn how Waystream's holistic financial wellbeing platform, which supports over 1 million health and care workers today, can help to reduce financial stress, improve overall job satisfaction, and we'll also share how easily Waystream now integrates with CoolCare's system for a really quick and seamless onboarding experience. As Ian said, if you've got any questions, do just shout them out or put them in the chat. I'd love to hear where you're dialing in from as well in the chat, and we'll answer any of your questions directly. So the topic of financial well-being, it's incredibly close to my heart, especially when it comes to our care workforce. We know that care workers are facing tough economic circumstances, but it isn't just about general economic pressures. It's about the very real impact these pressures have on individuals. And to illustrate this, I wanted to share a quick story from my time as CEO of the Care Workers Charity. And this is Jackie's story. So Jackie dedicated 20 years of her career to caring for others. She never imagined a time when she would be the one that needs support. However, one day during a welfare check, she had a pretty traumatic experience where she found a client who she was looking after had taken their own life. And this incident led to a PTSD diagnosis. She had to take time off work. On top of that, she was dealing with a verbally abusive relationship, which further compounded her stress and struggled on statutory sick pay. So she really reached a breaking point, and her colleague, I'm pleased to say, urged her to contact the Care Workers Charity for financial support to repair her car, which had out of the blue broken down. And this was essential for her to get back to work, having access to her car. What struck me about Jackie's story and what we constantly tried to address at the charity was how difficult she found the role reversal. Jackie was used to giving out food bank vouchers, but now she needed them. It's a stark reminder of the vulnerability that many care workers face. We're able to adapt our support and provide Jackie with a grant for car repairs to help her get back to work, which I'm pleased with. But Jackie's story is just one example of the challenges that many care workers face. And it really underscores why providing robust financial well-being support, it's not just a nice to have, but it really is a necessity for our workforce. So when we look at the broader picture, the statistics really reinforce this challenge. 57% of UK employees report that their mental health has declined due to money worries. 1 in 7 are financially excluded. However, in care, that's more like 1 in 3. When I say financially excluded, I mean that individuals can't get access to fair financial products or services that you or I probably take for granted. So stuff like a credit card or an overdraft facility. And finally, a staggering 50% of adults don't have £300 in savings. Jackie didn't have £300 in savings, so she had to turn to the benevolent fund. Others are turning to friends and family, predatory lending sites, or just going without. So these figures highlight the urgent need for comprehensive financial wellbeing solutions within our care sector. At Waystream, our mission is to provide fair financial services to frontline workers. We really believe in redefining how employees interact with their earnings, and we achieve this through lots and lots of data. Our mission is backed by our social impact partners, the likes of Social Tech Trust and Joseph Rowntree Foundation, and we're a B Corp, which means we're committed to using business as a force for good. We were founded in 2018 by financial charities and impact funds, and we're now the global leader for workplace financial benefits, offering a toolkit of over 15 financial products. Our system connects to over 100 HRIS, workforce management and payroll systems, including CoolCare, and we process over £20 billion in salaries annually that goes through our system. Critically, for employers, there's typically zero cost to implement our service and zero monthly fee. We're proud to work with 2,000 clients encompassing 3 million employee members, and we see an average adoption rate of 54%. In social care, this is slightly higher. This is more like 60%, although the Boopers, the Care UKs, the HC1s are actually over 70%. Their entire workforce that's enrolled in this app and using different parts of the toolkit. But it's just not just social care. You can see some of our clients here, major names like Asda Co-op, Hilton. In the NHS, we support over 130 NHS trusts, around 800,000 NHS workers. In social care, we work with over 100 employers covering over 200,000 care workers now. So we have real financial power in real people's hands. We view this as a financial wellbeing Fitbit, if you will. And we've partnered with all the key organisations that you would expect, the likes of Care England, National Care Forum and Scottish Care, that support the research that we do as well. The app is structured around 3 core pillars: improving financial resilience today, planning for the future, and building long-term security. This is a really important framework that the Money and Pension Service and Nest Insights developed to define what good financial wellbeing looks like. It's really important that you offer a solution to colleagues that addresses all of these points, because no one is the same and your colleagues will be on different parts of their financial wellbeing journey. Firstly, for improving resilience today, in terms of our app, this set of benefits is designed to help employees manage volatile income, to avoid unfair costs, and to react to financial shocks. So key features include pay. This is what we're best known for, and there are lots of others in the market like Flexen that offer something similar. So this is flexible pay, where you can choose your own pay cycle. Imagine the impact of a care worker being able to access their earned wages instantly rather than waiting for payday, especially for unexpected expenses. The car breaks down, I need to get to work, I need to put petrol in the car, I need to do that last food shop before payday. It could be, well, I get paid in a couple of days' time. If I need something, I could access that through the WageStream app and draw down on some of that salary. Budgeting, so through our integrations with the likes of CoolCare, we essentially provide interactive pay slips and budgeting tools, which helps your colleagues to understand their income and outgoings better. And discounts, our platform includes all the usual stuff that you would expect, the retail discounts and gift cards, helping care workers to stretch their money further on everyday essentials and treats. These tools are crucial for addressing immediate financial pressures and helping your colleagues to feel more in control of their finances right now. The second pillar is planning for the future. This set of benefits helps your colleagues to plan, to build towards milestones and progress long-term financial goals. The savings is the one that I'm most proud of. We offer bank beating savings options, which makes it easy for your colleagues to build a safety net or to save for specific goals. We pay 4.33% interest and it's fully FSCS protected up to £85,000. We took Investec's high net worth savings product. If you wanted to open that account today, you'd need £5,000. With us, you need a penny and you can open that account. It's easy access, completely free to deposit, withdraw, and access. Credit, our platform provides access to affordable loans. So this offers a responsible alternative to high cost credit for those who need it. And education, we provide free financial coaching, empowering employees with the knowledge and skills to make informed financial decisions and improve their financial literacy. Finally, we focus on building long-term security. So in the app, these benefits are designed to help employees manage their long-term finances and maximize their returns. The first that we've launched is a find and combine feature. It helps your colleagues to rescue old or lost pensions by providing a way to consolidate and manage their retirement savings more effectively. I was shocked to learn that there's £31 billion in lost pensions. £31 billion in lost pensions, and 1 in 5 report that they've lost the pension. So this is a new product that's designed to support our members. We don't just talk about financial well-being, we deliver measurable impact for the employer as well. I'm going to pick out a couple of stats. So the 27% faster talent acquisition was HC1. They saw a 27% faster time to hire since advertising WageStream, flexible pay with WageStream on their job ads. If you go to Indeed now, you type WageStream in, I think you'll see about 15,000 job ads that reference this. And the 40% figure, it was Green King Pubs, who saw a 40% reduction in payroll queries since offering WageStream to colleagues. They now have over 80% of their workforce using the platform because of that more frequent ability to see what they're earning on a daily basis. Because of our integrations with the likes of CoolCare, it reduces queries. It means things can get caught early. These stats have a real material impact on the business, and they're quite compelling. Now, you don't just have to hear it from me. I've got a series of case studies here that if you don't believe us or if you want to check this, please go and speak to any one of our clients. Speak to Anchor, who have been live for 1 year. They now have over 50% of their colleagues enrolled. 63% of those colleagues that have enrolled have opened a savings account. Of those 63%, around 30% would have never saved before. This is the first time they've opened a savings account. Or speak to Bupa, who have seen a 32% increase in overtime shifts worked over a 1 year period. Reason being, their colleagues were going to the local agency to pick up extra shifts because through that agency they could get paid weekly. Now, through WageStream, a colleague can pick up an extra shift on the Saturday and access 50% of that on the Sunday. So it really ties work with reward. Or speak to Liaise, who have 66% of their colleagues enrolled, and on average, they're visiting the app 10 times a month. Or HC1, who've got around 70% of their 20,000 workforce enrolled. And in 2.5 years since they've been live with us, have put over £4 million into their savings pot. Or Frimley NHS or Somerset NHS, and I could go on and on and on, but please do reach out to anyone that uses WageStream and ask them about the impact. Just a few more slides. We have an employer portal. Data, as I said, is really important, and we have a sophisticated management information dashboard that you as admins, as employers, will have access to. This will report on the usage, the impact that's being delivered to your colleagues. When your colleagues first download the app, we ask them some situational questions. We ask them the same questions 30 days, 60 days, 90 days later, and we will report back to you on a monthly basis, those impact stats in a very beautiful one-pager that's board ready. So you can show your board the impact that this is delivering to your colleagues and the business. We also have 24/7 support. So we really don't want your colleagues asking you questions about WageStream. All of our products are supported through the app. There's 24/7 support answered within 24 hours. Finally, and this was a whistle-stop tour, but given our integration with CoolCare, we can turn on this benefit for your workforce really quickly in a matter of weeks. And typically there is no cost to the employer, no monthly fees. So to learn more or to book a consultation with myself where I can prepare a personalized impact forecast specifically for your business, just reach out either via email or LinkedIn or through CoolCare. Any questions?
That was great, Alex. That's fantastic. So no questions have popped up on. We've got a Q&A box, or we've got a webinar chat. We don't mind which one you want to send any questions through on. I think some of those stats are really impressive. Could you just go back for a second? So I go back to the Bupa one for a sec, because I know that the one of the studies that we did before we started looking into this with Flexer, so quite a few years ago, reading a study from the US that talks about a high uptake of people sort of taking up and picking up additional shifts post having this type of system. So, I mean, 32% overtime shifts work. That's really impressive. And of course, Bupa is really big as well. So that 32% of staff is going to have a big impact. So can you tell us a little bit more about kind of, why is that such a big figure? Because 32% is bigger than some of the percentages I've seen elsewhere.
Yeah, absolutely. It comes down to one, we get really high usage. So benefits are great. EAP schemes are great, but you tend to have less than 10% of people that use discounts and vouchers and EAP schemes. We get really high adoption and usage of the app. Over 70% of Bupa's entire colleagues across dental, insurance, care are enrolled in the app. We get high usage because it's linked to pay. It's around their pay. And on average, a care worker is visiting the app 21 times a month. Liaise was 10 times a month, but on average, it's 21 times a month. Every couple of days, they're logging into the app. And that's typically to use the budgeting tools to look at their shifts, how much they're earning, that you can connect via open banking so you can see your spending and your earnings all in one place for the very first time. So we get really high usage. We then tie work with reward. If you can see on a daily basis, you're logging in, you're seeing, I just earned £100 for that shift yesterday, I earned £80 for that shift yesterday. And you can see that as you're accruing it, you can access a percentage of that. It ties work with reward. And so with Bupa, a lot of their colleagues were going to the local agency because they were getting paid monthly. They wanted to pick up some extra earnings. The agency pays weekly. It's one of the real benefits of going to an agency. Well, through WageStream, you could get access to that daily almost. And so by having visibility of the money that's coming in, you can also see through open banking some extra expenses that might be coming up. It prompts you, it nudges you, this toolkit, to say, why don't you pick up an extra shift? And if you pick up that extra shift on a Saturday, you could earn that extra money or get access to a percentage of it the next day. So we saw a huge shift in Bupa workers that were saying, actually, I'll just pick up that extra shift through Bupa because I've got WageStream and I can access that money quicker.
So just to be absolutely clear what you're saying there, they're employed by Bupa, maybe perhaps on sort of more flexible contracts, but in order to get money quicker, they would go to the agency, which actually might place them with Bupa,
Might pay some of Bupa, exactly.
or somewhere else. So they're kind of
Correct.
getting paid via an agency. So Bupa would be literally paying a premium, and I know that Bupa being of such a scale, their premiums are perhaps not as much as some other organisations, and they're UK wide, but still Bupa's paying extra to literally get potentially the same employee, working back at Bupa again, just purely because of the sort of the quickness of access to the money, and
Exactly.
now you're effectively um, you on a level playing field, or allowed Bupa to be on a level playing field with an agency or the agencies that they supply.
Precisely.
Wow, that's interesting. And do you track agency usage and whether or not that's kind of reducing, by the very nature of the fact that people are picking up additional shifts? Is that any sort of data you've got in that regard?
We
Or is it
do
is
specifically with Bupa over the first 12 months of working with them. We did track usage around a reduction in agency spend. There's a lot of really smart things we can do with the data, and we love to work with employers to understand what some of their KPIs and metrics are, such as faster time to hire, improvements in retention, and we can actually build with you the ability to track this and show the impact of those that are using WageStream. What's the impact on,
Mhm,
say, sick leave? We see a lot of sick leave within the last few days before payday.
mhm,
Maybe that's as simple as, like Jackie earlier, didn't have enough money to fix her car, so she couldn't get to work, so she has to call in sick.
mhm.
Post WageStream being able to have that power over your finances, what difference it has on metrics like sick, agency, recruitment, retention.
Yeah, makes sense. So I've got an objection for you, or at least something that somebody said to me at a care show. And we were talking about at the time we were talking about Flexit, and the individual said, "Oh, I like this because I'm in control of our money. I'm not paying all my monthly salary to external company X, and it wasn't WageStream, by the way, but it was a kind of like I'm not going to do that because I don't trust them. You must surely see that kind of objection, like what, I've got to pay all my salary to WageStream and they're going to have it in their bank account. Oh no, I'm not doing that. You've got some really big clients, very well known organizations outside of care as well as inside of care. So clearly they're okay with it. But what would be your response to that gentleman that we met at the care show?
Yeah, it's actually our superpower, the way we reconcile. Everything's automated. Everything works through our banking technology. And the way that we do this is when a member of staff opts into WageStream, the employer's obviously signed up. So let's stick on Bupa. Bupa colleagues enroll into WageStream. We create a reconciliation account. Essentially, it's a bank account. It's got a bank account number, sort code, um, managed by the Bank of England, and we make a one-time change automatically to the payroll file. And so what happens is on payday, we sit completely outside of payroll. There is zero manual deductions or work that is required from payroll. That also means that you can use WageStream right an hour up to payday. And typically, our average advance or stream, as we call it, is £65. And typically, it's in that last week before payday. Once payroll's run, we automatically, through our banking technology, will intercept net pay. We make those deductions. We say that Ian wanted to put £100 into his savings account. Ian took £50 from his salary. Ian has bought an £80 as the voucher to save 4%. We automatically reconcile that and pass the rest on to the employee's high street bank account. That takes seconds. We process £1.5 billion a month is going through these reconciliation accounts. And to answer the question or concern, the money doesn't go into WageStream's bank account. Billions isn't flowing into our bank account. We have millions of these reconciliation accounts. They are in the individual employee's name. They are owned by the employer, but they are managed by WageStream purely for the purpose of reconciling and protected by the Bank of England.
Got
So
you.
this
So
whole,
that effectively the money goes into that account,
correct.
it gets reconciled, and then the money leaves the account into the staff member's own personal bank account with the deductions that they have themselves authorized and requested and put through in the middle of during the month.
Exactly. And that takes seconds, zero impact on payroll, zero impact on payday, but it allows us, and like I said, it's our superpower, it allows us to automate everything.
Right. Yeah. Which is I think again is why it's so attractive to larger organizations, because doing the deductions on thousands of staff is really just not going to be something that you want to add on to your payroll team. If you're saying we're going to do this for our staff, but it's going to come with all these negative additional admin requirements, it's not really going to work very well. It's also subject to manual issues, isn't it? Whereas if it's fully automated and it's already happened, it's a kind of a very smooth process for the employer.
It also allows us to do some really smart stuff. So we mirror the employer's payment reference. So what
Ah,
that means is, again, let's say you work for Anchor and you drew down £50. That £50 will be in your bank account from us. We have a 500 million debt facility with Citibank and Deutsche Bank. That money is paid to you in seconds. But if you log into your bank account, it doesn't say WageStream have paid you £50. It will say Anchor have paid you £50 or Bupa
yeah.
have paid you £50. Again, others are not able to do it that way because of the
Mhm.
manual deductions, and that can potentially cause some issues. You don't want to have a third party on your payslip,
Mhm.
ideally. You want to be able to see 100% of net pay has come from your employer for future affordability if you're going for a loan or a mortgage or whatever it may be.
Yeah. So, I mean, I've got some anecdotes that from other systems, and I think you know where it comes from. But one of the ones I always really liked was, you know, a staff member was actually at the till and their own card was declined.
Yes,
So they were buying some food, you know, a normal kind of. I think it was not a normal shop, if that makes sense. It was kind of before payday, but they were doing some shopping. It was declined, and then they went on to their earned wage access provider, saw that they had a balance, so they could draw down some money, and then their card worked again while standing at the till. And
it's
I
cool.
thought that's really cool. But then you have vouchers, don't you? So
Mm.
you could be in Asda, you could be about to kind of pay for your shopping, and you worked out maybe you've got a rough idea how much all is, but you could effectively get yourself a voucher there and then live, you know, just in front of the till that gives you a discount. So, tell me a little bit about the. You said 4%. So what? I would get £100 voucher, effective for £96, or is it £100 and then I get £104 voucher? Um,
Exactly that. And we have the exact same anecdote where people are at the till, they haven't got enough money. You can use your earned wage access, so your accrued wages. You can say you're in, we took as an example, Tesco, there's hundreds of discounts and vouchers. You could buy, let's just say £100, to keep the math simple, voucher at the till, you'll only pay £96, and then you just scan it right there and then.
oh, and then you pay the balance on your bank card of
Correct.
whatever's left. Now, see, I mean that's £4 is £4, isn't it?
Correct. Right. All absolutely, it all adds
It is,
up.
yeah,
And
yeah,
I used to work in employee benefits years ago, where it's gift cards, where you have to sort of buy a physical gift card, you preload it, you have to pay these fees.
yeah, yeah, yeah.
People just don't use it. You need instant gratification.
Yeah, and I suppose if for reasons you went to Sainsbury's instead for the day, or Tesco's or something different, you can kind of do the same thing. And I think 4%. Am I right saying 4% is kind of one of the lower ones because it's a sort of a high street supermarket? But you do have all sorts of different other kind of vouchers, and they've got
Absolutely,
all
there's
sorts of different
hundreds.
different levels as well. And so if you're in something like Pizza Hut or a restaurant, it would be a different number to different percentage potentially. Not all 4% is what I'm asking.
Absolutely. And look, some, again, it comes as free with the platform. Some of our clients have high costs EAP schemes and discount schemes,
Mm.
very high cost, and they are replacing them and just using WageStream. Some will have both. So HC1 as an example, they use Reward Gateway. They're quite happy with Reward Gateway.
Yeah.
They're able to use the other parts of the hub. And so on our app, because we get such high adoption, as I said, 70% of HC1's workforce, on average, are logging in 21 times a month. A lot of employers are using our app as a hub for other benefits and discounts. So we have the ability to add a tile, which we do for HC1, that has Reward Gateway and others. So in the NHS, you'll have Loop, which is allocates
Yeah.
comms tool. And you can click that and either single sign on or automatically log into other benefits. So people are using WageStream as sort of a hub for their
Mm.
benefits and rewards.
And do you see them? I mean, you mentioned that Indeed has got a kind of wage stream search code. I know, having spoken to you and others, that the very nature of having these things, sometimes it doesn't quite register on a staff member who's never seen this before. But
Mhm.
once they have, it's like, oh no, that's genuinely really good. That's helpful. You wouldn't necessarily not leave the job because the company doesn't do wage stream anymore. That's not quite a thing. But I have seen organizations kind of almost adding, it's like they ripped it from your website and putting it in their staff benefit list. We've got a voucher scheme. We can get access to money earlier. We've got savings. Do you see that as well? Do you see sort of effectively the tools and clever things within WageStream just becoming part of the company offering?
Yeah, 100% in. And earned wage access in the US is huge. They actually get paid, I believe, mostly every 2 weeks anyway. It's just expected that they'll get access to earn wages. I mean, decades and decades ago, we would go to work and we'd get cash for the day that we've worked. It
Yeah.
suits the employer to pay monthly. It does not suit the colleague. Um, this will be over the next couple of years, it's going to be expected. You may not leave your employer because they don't have it, but we're seeing, especially in those first couple of weeks or few weeks, you see quite high churn in the care sector.
Mhm,
And the people that come and join, they need access to salary sometimes. They can't wait a month or
mhm.
maybe even 6 weeks if there's an arrears period. So being able to offer this as a benefit can support with that early retention piece, but it will become a standard.
Yeah, so I've started with working with a company, but I'm going to have to wait a whole month until I get paid. Actually, not you won't have to wait a whole month. You can kind of get access to 50% mid-month if you need it,
If you need
and
it,
and
absolutely.
it's entirely up to them if they want to use that. So on that subject, actually, so staff, there's a lot of benefits for the employer here because we talked about kind of like potentially reducing agency usage, people picking up additional shifts, staff benefits. Look at this nice list of things that there's the you get when you work here, and some of them are actually technically wage stream offerings. But what did staff say? I mean, you've got high use rates, and you've got hundreds of thousands of staff using it. No, it's millions, isn't it? You've got
Yeah.
millions. What's the kind of feedback from staff? What do they say? And how do they communicate? Their satisfaction, because that's got to be a concern of the employers. It's great for the employer, but what about for the staff? I mean, it seems like it's good, but what would you say to sort of like how satisfied are staff?
Yeah, the impact is why I joined WageStream, having come from the Care Workers charity, having chaired Care Innovation Hub, which National Care Forum run, and built my own startups to tackle loneliness. It's the reason why I came, and impact is at the heart of what we do. We have a chief impact officer, Emily, who's incredibly impressive and leads all of the research that's been done recently with Care England, studies with Harvard, um, that looks at the impact of financial wellness. And so what we do when I said this earlier, when colleagues first download the app, we ask them a load of questions. We ask them the same questions, 30, 60, 90, and a year later. And so we have millions and millions and millions of data points, both qualitative and quantitative, that talks to the impact that this is delivering. And we've got a two-pager, which I know you've said at the start you'll be able to share, that summarizes with 110,000 of our current care worker members those impact stats. And I'll pick out a
110,
few.
110,000.
110,000 live care workers.
Wow.
Um, 86% report feeling less stress after 30 days of using the app, the toolkit. 90% feel more positive towards the employer. 10% are not saying they feel less positive, they're just not, they don't really care. They're indifferent.
That's fair enough.
19% say they sleep better. 19% say they sleep better
Hmm,
after 30 days of having power over their pay, having this toolkit. And 31% say they're able to focus more on doing a better job at work for their residents or for their service users. These are
less worried.
just some of the stats, and we'll get the two-pager off to you. And I'm happy to, like I say, I'm happy to do a personalized impact forecast for anyone on this call or anyone that's interested, really, and we can do
That,
that for the employer.
that's cool. I've got a challenge for you, or
Please.
I've got another objection have received over the years, and I I've kind of don't feel it's a justified rejection, but it's definitely something, or objection, I should say, but it's definitely something that people have said to me, and I'm going to put it to you. So, ooh, this earned wage access thing. Oh, that sounds like payday loans. It sounds like staff could get stuck in a debt cycle. Don't like it. My staff won't want it. I'm not doing it. No, forget it. Don't want to talk to you about it at all. Um, Debt cycle, and I know that that's not a thing, but what would you say if that person was again standing here and kind of raising that kind of objection to you?
It is a common question, and I totally get it. It was one of my big questions. It's just not what we see in the data. We see I'm trying to think about the right word. There's a bias between typically higher paid individuals, typically leadership, and lower paid individuals. And the the belief is, or the thought is, that lower paid individuals are irresponsible with their money. And so if they have access to 50% of their wages, they're going to use it all and they'll get into a debt cycle. It's completely the opposite of what we see. And having now supported millions of people through the app, we can speak with absolute confidence to this. And there are lots of external studies that also back this up. Lower paid individuals are really responsible because they have to be. They're very responsible with their money. And this is an opt-in service. It's also opt-out. So if you decide that it's not for you, you can opt out. And for those that use the toolkit, we just sort of go back through the products. Over 80%, the ones that are logging in on average 21 times a month, over 80% are using budgeting. They're using what we call track. Our track screen allows you, through integrations like the ones with CoolCare, you can see on a daily basis the shifts that you're working, and the monetary amount for those shifts. So I can see on a daily basis how much I'm earning. As a variably paid employee or colleague, it's really difficult to have to wait until the end of the month and then say, oh, here's my pay slip. You don't know because it changes month on month. I know what I'm going to get paid because I'm salary. So the vast majority are using the budgeting tool, the track feature. They connect via open banking their spending. So you can see in one place all the money that's coming in and all the money that's going out. That allows them to budget. And because of that, 83% of our members actually spend less money. They pick up extra shifts. They tie work with reward. The savings product, over 60% of our enrolled colleagues, which is incredible, are setting up a savings account. And that's because they can get 4.33% interest. It's automated through salary. The flexible pay element, which is your question and could be seen as the most divisive, around 35% of colleagues will choose to use flexible pay at some point. The average drawdown is £65, and typically that's the last few days before payday. But the average number of drawdowns is around 3 a month. So what does that tell you? It tells you that they want to mirror a weekly pay cycle. Weekly pay cycles work. Monthly pay cycles support the employer. Weekly pay cycles give more choice. It allows you to match incomings with outgoings. That direct debit that's come out, I don't have to wait another few days until I get paid. So it's just not what we see. And just finally on the staff satisfaction, take a look at Trustpilot. There's 5,000 reviews. Take a look at the App Store. There's 48,000 reviews, 4.8 out of 5. So it kind of speaks for itself.
48,000 reviews. Yes, I think it probably does. That's fantastic, Alex. So there doesn't seem to be any questions from anyone. But if you do have any final questions, we're more than more than willing to get them answered. And just to finish off with CoolCare, this is just yet another example of making life easier for our customers and their staff members. Our system's all about automated tasks and adjustments. That's very much what we're seeing from WageStream here. We've got system integration with them that is all about making this entire process automated and very much empowering for the staff members. The data transfers are just set up, so we just contact us and we can kind of get it set up. It uses an API key, so the data is kind of gets linked behind the scenes, and then everything starts to appear in WageStream automatically from CoolCare clocking activity. And of course, it's all about saving time, reducing admin costs, reducing agency, and giving you savings. And you can definitely see that WageStream is yet another thing in our ecosystem that really helps with that. And yeah, if you want to contact us, you know how to get a hold of us. I'm sure I'll be sending out an email with the first email you'll get will be the 2-pager doc, which I'll be sharing shortly after this webinar. And then the second email you receive will be on the actual video that we've recorded here. And then that's that. So if you want to get a hold of Alex, that's his contact details, or you can contact via partnerships at WageStream. And if there's no further questions, I shall bid you all adieu. Anything else from you, Alex? Anything else you'd like to say just before you go?
No, that's it. Thank you so much, Ian. I really appreciate this. Please do reach out to me. Happy to offer any advice or support where I can.
thanks very much for joining us. Any questions, just let us know, and watch out for that 2-pager via email. So thanks very much.
Thanks all.
Bye. Bye.